Brad Williams, Frugal Finance. Let's talk mortgages. Yeeks. All right, just FYI, I owned a mortgage company for a bazillion years. I was a mortgage broker, very successful, and I loved it. Oh, okay, I loved most of it. There's just some stuff that I didn't love, and you just get tired of it. There's just some idiosyncrasies, rising interest rates that will drive you out of business, or some of the underwriting guidelines, or some unscrupulous countrywide. And that's who I brokered a lot of my loans to. Why? Because they just underwrote everything. In other words, they just stamped approval and going, yeah. And fortunately, I pretty much was a white glove kind of broker. And in my many, 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 many years of doing this, I never had a loan go upside down on me. What does that mean? That means somebody that was not qualified to buy a home got a loan and then bankrupt or defaulted on the deal. But that being set aside, the mortgage industry has changed significantly, where the majority of this stuff is all electronic. And I think it's great. I think it's fantastic. When I was doing this, even a refinance would take 35 days. And that's just ridiculous. It's incompetence. Today, the industry is set up where if you want to do an all cash deal, you probably could do it in 4 to 5 days. It really, the problem here is you're dealing with so many different components. In other words, you have a buyer and a seller, and then there could be contingencies, and that's what can delay all this stuff. Then the paperwork, and that's what this is all about. What is mortgage closing? What happens at the closing? I have a lot of videos on mortgage. I'm not going to go into the step-by-step as to what got us here. This is, you've locked in your loan. You're happy with that. Everyone's cool with this deal. In other words, the real estate agents, the attorneys. Okay, I'm in California. We just have all title related closing. But back east, they're using a different closing procedure where the attorneys will put together the closing documents, or quasi, and they just require another procedure. Good or bad, it's not my call. But you're going to have a lot of documents, and it's mind-boggling. Here's the problem with the industry. You're going to get a note. You're going to get a deed. You're going to get mortgage disclosures. You're going to get closing fees. It's called a good faith estimate. It's a requirement. You may go to a title company, and you're going to have a title officer. And the title officer is paid a commission. They're not going to tell you, but they're on the clock. And they could have 9 appointments, and they're back to back, back to back, back to back. And they're going to push you through this closing. When you're looking at nearly 90 pages of information with fine print, in legal terms, there's just no way to absorb that information. My recommendation, and no one will ever tell you this, is get a copy of this information beforehand. The reason being, the closing is the last step in buying and financing a home. Well, the closing also applies to when you're refinancing or any mortgage-related activity. If you're doing something as simple as a second mortgage on a home improvement, well, that's the same steps. There's going to be a closing, and the requirements are pretty much the same. Remember, we're up here at CFPB. This is Consumer Finance Protection Bureau. This is their language. This is here to protect you. Why do I provide this government information? Well, because you have to find something trustworthy, and let's just go with the benefit of the doubt. Well, let's hope that what the government's telling you is the facts. And what they're saying here is you're going to have this settlement process, and the procedure is documentation, documentation, documentation. You're going to be responsible for reading this information, and you're going to have a lot of different parties involved. Well, in my many years of experience, it's you, all right? Sometimes a real estate agent is going to show up. Why? They think they're providing a service. Or maybe they can answer some questions. Well, generally, if they're representing you, what their capabilities are is if you have questions related to the documentation, that real estate agent is supposed to get a hold of the other real estate agent who's supposed to get a hold of the seller, et cetera, et cetera. In this day and age with Zoom and all the other online features, and because sometimes these are distant, sometimes you're dealing with a lot of corporate ownership in terms of residential properties. You're going to see these perhaps on Zoom. So you may have a real estate agent, one of your silos or one of your boxes or in one of your conversations. Well, you have the title insurance company. You're going to have this escrow company. They're generally one and the same. First American Title, it's probably a name you recognize. They're one of the largest. They're going to do one and the same in a lot of cases, at least on the West Coast. It can be different on the East Coast. Your attorney, in some cases, is required. Now, if this is a complex deal, if you're in any particular state, it doesn't matter. If this is a $40 million transaction, you probably have the wherewithal to bring in an attorney to review all this stuff for you. And you're probably going to want to consult that attorney during this closing. So there may be a seller's attorney and so on and so forth. So there could be a lot of people involved here. Try to keep it as simple as possible and have somebody that can answer your questions. The title company, they're going to shrug, okay? Their job is to close the transaction. They will have zero knowledge on the property. Again, your real estate agent and the selling agent need to be available. Now, here's the critical factor. You are not obligated to sign these documents. The industry is rife with crooks. And I am just dead serious about this. You're going to see someone telling you in their good faith estimate that here are your closing costs. Then when it comes to actual closing, they're going to sneak in something there. There's a lot of ways to make a lot of money from the brokerage side. Don't think that that good faith estimate discloses everything. This industry is rife. And what happens is they'll say your closing rate, you locked in a rate at 5%. Then you come in at the closing and it's 5.5%. And they play this game because now you have contingencies. You are renting a property. You are renting an apartment. You signed your 30-day deal where you're gonna leave that particular property with the contingency that you're moving into this other place. Well, mortgage brokers play this little game, and then all of a sudden they jack up the rate. The reason being, from 5 to 5.5%, they're going to reap that huge benefit, and that is huge. On a $400,000 loan, that could be $6,000 under the table. All right. Paid to them because they jacked up the rate. It's called discount points. It used to be extreme when I was doing this. Today, that good faith estimate is supposed to disclose that. Don't for a second think that people won't work this game one way or another. So be careful. Read the documents. Try to get a copy of this information 24 to 48 hours ahead of time and read it. I know it's really dry stuff. Then the language, you're not going to understand the language. That's the problem here. Again, if you get this information for him, I strongly suggest, in addition to reading the various links here, I will always add a link to the bottom of the page here. But go ahead, when you link to this thing or when you open this up, just go through this stuff. And I have videos on some of the terminology. But again, I can't explain it all. Read it if you need it, then reread it, then read it again. You're going to be in a position where signing those documents, you're going to be shaking. You're like, oh my God, I have this 30-year commitment. Well, yeah, that's the fun part. I mean, it is. It's like, wow, I've accomplished this. I've saved up the money. Now I'm going to own a house. Well, that's great. Okay, but make sure you're not being redirected to the benefit of the mortgage company and whatever terms that they're providing. 99% of the time, the terms and the conditions are agreed upon ahead of time, and there's not a change. But there are bad guys out there, as we all know. Just read the documents. Remember, before you sign, make sure you carefully read and understand all the loan documents. Brad Williams, Frugal Finance. Thanks for watching. See you soon.